The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello, and welcome to the COB. It is the 29th of May, and I'm Nadine Blaney.
I'm Juliette Sarli. On this down day, I guess it was the inflation shock. It was the Wall Street lead coming back after that long weekend as well. But the fact that inflation is not coming down, saw the Aussie spike, markets go down, it does really seem that those rate cut hopes are being dashed.
Well, yeah, we've got the likes of Warren Hogan. You know him. He's the economic advisor for Judo Bank. We have him on the program regularly. He's saying there is even a chance of a hike now at the next meeting. But what it means, I suppose, and we'll talk to this about our guest who's coming up, is, you know, are some stocks now looking really fully valued, maybe overvalued, if we're in this higher for longer scenario, with some now not expecting a cut, you know, well into 2025. Even David Bastianese, I shouldn't say even, but David Bastianese at BetaShares has now pulled back his forecast. He's expecting one cut to come through in December. You know, things are changing.
Have we seen where the market is? I mean,
No.
I can tell you where the ASX 200 is, but there we go. There's the CBO 200. The ASX 200 down 90 points, 1.2%. Very much red across the board, except for, and I know we're going to get to this in a little while, but some of these small cap gold players looking really good, not only on the gold move, but also Ramelius making this play for Westgold, which is sending its shares price up 6%, and Alumina also up by about 3.3% as we saw that move in aluminium. I've got to learn how to say aluminium. I've been saying aluminum, which is what your people would probably say too.
I've taught myself to say aluminium without even pausing now beforehand. So yeah, we are going to just, you know, be chatting about the higher for longer narrative that, you know, is certainly taking hold here in Australia. Now, of course, the ABS puts some of this down to one-offs, you know, a bad growing season for berries, for example, pushing up the price of food.
Diana was just saying she's not seeing strawberries rise at Coles.
Well, I only buy them when they're on sale, so there you go.
Well, I buy frozen ones.
Now, what I was going with that was, but insurance. You know, insurance is up. And
health
that
premiums.
Health premiums, you know, and we covered two of those stocks in the call. We'll get there in a little bit later.
And then, you know, if it's not already making a tough time already, if you're a journalist, as we are, it is, you know, an even tougher time out there. The adoption of AI, News Corp going through with, you know, a red pen and getting rid of a lot of journalists, which is a very sad day for our industry, but it also is sad for people facing high interest rates, cost of living pressures, and potentially losing their jobs as well. Yeah,
so that will obviously, you know, influence the unemployment rate. I mean, obviously not massively, but it happens in you know, when it's happening across the economy. That's why we're seeing the unemployment rate rise. So sectors looking mostly negative.
Yep, let's kick it off with some of those industrials, all in the red there. I'm not seeing any major news, but very much lower. Kicking it over to the banks.
Yeah, lower across the board. I mean, those are pretty steep falls. So if people and households are in trouble and rates are going to stay higher for longer, what does that mean for the banks? Pain on the way? And there's your gold thematic.
Yeah, I mean, I think that's not the greatest chart for, oh, look, I'm bringing back my American accent after talking to an American for 10 minutes earlier. It's not the best chart to really reflect some of those moves with Ramelius. So I think we might have that in our corporate news. Let's just get to some of that corporate news now. Fisher and Paykel, of course, they're gaining on optimism about its full year net profit being hit by what they said was 3 abnormal items.
Yeah, one of the best performers today. So that's nice to see. Fonterra says that it's boosting its full year earnings forecast. Ramelius to the downside, as you mentioned, though, big time after it filed an application with FIRB about a deal involving Westgold and Karora Resources. And IAG, our stock of the day, served with a class action alleging that the insurer secretly slugged loyal customers with higher prices via a pricing algorithm, and that saw its shares down by 3% today. Look, I think it's worthwhile mentioning that the miners were particularly hard hit, and that was after we saw the price of iron ore in Singapore really being really pulling back. So there just wasn't like anything really going for this market overall in terms of the big picture. You know, we've got BHP flat, but Fortescue is off by 3.3%, Rio off by 1.6%, and Wesfarmers, you know, even in the consumer staples space, down by 1%. So it really is, I can actually show you, you know, like really is, you know, a C of red out there. The big exception that you can see clearly there is, it's Fisher and Paykel there in the healthcare space.
Right, let's get to our guest, Mark Gardner from MPC Markets.
Good
Lovely
afternoon.
to see you as always. Let's start with the CPI because, you know, it is repricing once again. We just heard what Warren Hogan might think. Is this, you know, an anomaly in that health prices, health premiums went up, or is it that we really just can't get this inflationary figure down?
Look, I think food prices have gone up. We're seeing that in the States as well. So I think grain prices are up well over 30%. In the last few months, as there's dry conditions or overly wet conditions in Europe. And look, if you took out the government rebate for electricity, the electricity would have been up 12 or 13% in the last 12 months, but that brought it down to only up 3%. So there was some taken out of the figure as well. So realistically, we're always going to be higher for longer. Kashkari was out last night in the States saying he wants to see at least 3 more CPI numbers before they even consider cutting rates. And I think that's what the market sort of skips over is that the Fed or the central banks have got to see months of data before they make a definitive choice on where they're going to go with rates. So we just can't get too far ahead of ourselves just on spec. Basically, central banks aren't speculators. You know, they've got to be very prudent when they're making their decisions.
So. Has anything changed for you as an investor today in the wake of that monthly inflation data, which again, this is a volatile read. This is not the quarterly read. You know, some economists actually think that we're reading too much into, you know, what happens from month to month. But, you know, put your investor cap on.
We've got a lot of consumer staples. We're in gold, silver, copper. So it hasn't, and we've been out of consumer discretionary for a couple of months now. So I'm not really surprised to see the banks come off as well. We've just got hybrids on there instead of the actual banks themselves. I think, you know, overall those, you know, the big four are at extraordinary prices at the moment. And look, if you look at the States overnight, if you take out Nvidia, the market was broadly down. So I think that's kind of masking. Is that there's still on Twitter and social media, there's still a lot of joy out there because everyone's celebrating Nvidia, but the reality is that it's like Fisher and Paykel on your screen before. It was like the one green dot on the screen overnight. So we're very defensive as it stands at the moment. Probably our highest cash level in a few months.
Let's talk a little bit more about Nvidia because it's not just Nvidia, it's the AI boom, it's the, you know, we've talked about this before, the data centers, the energy, what potentially banks could be doing. Where do you see some opportunity there?
I think the energy space, copper and uranium particularly, with the energy the data centers are sucking is just absolutely incredible. You've started to see countries and states cap data center energy usage. So they're going to have to build out more capacity for AI to continue its rapid growth path. Obviously, the Mag 7 have all got a vested interest in AI, and they've got about $400 billion US sitting on the sidelines. So that's a fair whack of cash to be able to go and throw at at expanding those data centers. And look, I mean, Nvidia at the moment is just I think it's now eclipsing the entire German stock market by 600 billion, and it's bigger than most sectors. Global sectors are in the world now. It's bigger. I think it's about $1 trillion bigger than the global market cap of all the miners. So yeah,
that is so crazy.
It literally has. Nvidia's jumped about. I think it jumped an entire Cisco last night alone.
Wow!
And in the last 4 trading sessions, it's put on more market cap than JP Morgan, the world's biggest bank. So it's kind of getting into meme stock territory. I think Nvidia's a great company. They've got a great product. There's solid demand for the product. However, we're putting on a couple of $100 billion a night now. I think it's probably getting a little bit silly.
Yeah, it's crazy.
So how do you gain exposure to the AI thematic? Because there's a lot of talk about doing it via the energy thematic or the data center thematic, or there's new ETFs coming to market as well. One of them was mentioned on the call today. It was the Global XAI ETF.
It's not. No, that's the uranium one, isn't it? Wire. I was thinking.
Wire is a copper.
Yeah. EETH.
Stop.
Yeah, stop. Let Mark answer. That's why he's here.
I'd be patient, to be brutally honest.
Okay.
We are at fairly extreme levels as it stands. I don't think you're going to miss out on I mean, mind you, I've said this before, but I don't think you're going to miss out on a huge amount, except, you know, there is one stock at the moment that's really, you know, shining very brightly, but they're all the, you know, they've got to start making money out of AI realistically, and I think once these orders start to you know, peter out, and, you know, budgets start to get constrained a little bit because they're not actually getting a return on the investment. We'll sort of, I mean, look, it was similar to 2001 in terms of, you know, we obviously had the massive boom in prices. I think Warren Buffett at the time was massively criticised publicly, and he waited, obviously the bubble burst, and then became like a very large tech investor. So I don't think you missed the boat in AI. I just think you just need to be patient, because a lot of these companies, I mean, it's just the picks and shovels at the moment. Realistically, it's in terms of AI, like the chips. I think that the blue sky earnings really does come from the software, and I don't like Google, Meta. You know, most of the Mag 7, they didn't really even exist until 3 years after the tech bubble. So there is, like, one of the best analogies I've heard is we're at the bottom of the first innings in a baseball game here. This is a 20 or 30 year thematic, and there's going to be bumps along the way. And yeah, you don't want to get caught. You don't want to get caught paying the top and not have any powder dry to. You know, to be able to add to that position.
Yeah, because it's also how companies will use AI to improve earnings as well. I think that's a fascinating conversation. So banks or insurers or, you know, anything. Yeah. It's how AI then becomes used that will also be a big thematic.
Yeah. I think healthcare will particularly be in the pharmaceuticals. The rapid, like how rapid it makes their research process compared to previous is going to be huge, and that saves. I think it saves a lot of the pharmaceutical companies money. So I think that's where the applications will be first. Is more trying to make cost savings rather than chasing revenue. And then we'll probably see over the coming years that chase for revenue.
All right, never wrong for long. AIQ is the ETF from Global X. In my defence, 80 minutes in this hot box, my brain stops working.
It's just fun to tease you every once in a while. And I will say that was mentioned on the call. I feel like I'm always dropping, you know, references to the call, but it's a great program, and the ETF whisperer, as he's called, Andrew Whiteland, weighed in on that one today.
I believe there's 30% NVIDIA in that or something like that.
Oh, wow.
So I watched the call. So.
Oh, there you go. You learned stuff on the call. All right, Mark, always a pleasure. Mark Gardner, MPC Markets. Of course, we touched on the fact that the stock of the day was IAG.
Speaking of, Henry Jennings, Markets Today, Andrew Whiteland from DP Wealth Advisory.
The inflation data that just came out sort of showed that insurance and financial services, I think there was about an 8% uplift there. So comfortable with IAG, and if it was to weaken further, potentially it's actually an opportunity. So it's a hold for the time being, but any further weakness might be.
As far as IAG goes as an investment, yeah, really, why bother? It's got a yield. It's not been going anywhere for a little while. It's been going kind of sideways, 620 to sort of 650. It's probably towards the bottom end of that range, higher yields because of this CPI bounce, which, if you look at the numbers themselves, one of the big increases has been financial and insurance services. So, you know, this is, they're doing well. They're raising prices and they're getting yields up, and they're doing better out of the yields. So I think here it's a hold.
All right, quick look at the market leaders on a down day. Fisher & Paykel hopefully there. Yeah, there it is, up from almost 4%. Alumina, I mentioned that big spike coming through in aluminium. Genesis Minerals, Hub 24, West African Resources also looking good today.
Yeah, and not a lot of news associated with some of those other names as well, interestingly. When we get to the laggards today, Neuren Pharmaceuticals, you spoke with the CEO today, didn't you?
I did.
Yeah. So that's up online if you'd like to have a listen. I think it's just this corporate presentation, but as we mentioned, it was the best performer on the 200 Monday. Ramelius, on that news we've already got you across. A2, Milk, Centuria, and Strike Energy. No news that I can see associated with those companies today.
All right, have a look. Well, Ramelius we touched on, didn't we?
Yeah,
Westgold,
yeah. I said Ramelius.
Sorry, having a look at the small caps. Alligator Energy. That's a nice company name. 9% jump today. I don't know any news behind those.
Well, it's uranium, so I haven't paid attention to the price of uranium, but sometimes these companies get a lot of enthusiasm. I was just looking up Evita Medical. I'm not seeing any news associated with it. Alligator Energy, let's see, Jules, we've got some sort of a drilling recommencing at its Samphire project, and it's provided a project update as well, so clearly some good news in there.
Okay, and to the downside in the small cap space, Southern Cross Media off by 8.2%. We know that that's had quite a few moves in terms of that potential merge. Trajan down by 7.4%. Interesting, that was a stock that I spoke with Simon Conn earlier today about. He thinks that that's a really interesting stock.
From Investors Mutual. Well, that is up online and they're really good value. So I'd encourage you to go to ausbiz.com.au if you're not watching us via that website already right now. But if you're listening to this in podcast form, and we've got, some great interviews, mostly that Juliette did throughout the day today.
Yes.
I was just on the call, just to mention that, just in case you didn't know that. I was on the call today.
Right. I didn't know you were on the call. Let's have a look at what's happening tonight. German CPI, Eurozone M3 money supply, the Richmond Manufacturing Index. We've got one of the FOMC members speaking, and the Fed Beige Book, always a really interesting piece as well to tell us how the overall economy is faring.
Yeah, breaks it down into different sort of sectors as well as states. So we'll be parsing that in the morning. Tomorrow we get building approvals, very volatile read. We get private sector credit as well as CapEx. And then, we've got a 360 AGM. I was reading a note today, can't remember who it was from, talking about 360 being one of the ways to play AI. Anyways, we'll hear what they say on that front, and also an update on the advertising business and earnings champion iron.
All right, well, just recapping where we're at the end of the day's trade this Wednesday. It has been a down day. We had a weak lead coming through from Wall Street. Oof. Then we had hotter than expected inflation. We finished down by 1.2% on the CBO 200. The ASX 200 down 91 points, 1.2%. 7,675, as we've mentioned. Illumina, Ramelius, Westgold, Fisher & Paykel, really the standouts.
Yeah, off the lows of the day, but that's pretty much all you can say about it, putting a positive spin on things. Hey, look, if you've missed any of the interviews that we've done throughout the day today, you can access them via our newsletter or the website. And in the meantime, we're getting ready to bring you more good stuff tomorrow.
Yeah, after a sleep. See you tomorrow.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You're still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No. I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
I'm still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.